Hello everyone, this is Harish. Welcome to the knowledge series on economy, finance, and banking. This video is a continuation of our discussion on payment systems. In the previous video, we discussed about role of central bank to maintain safety and integrity of payment system, and we have also discussed about two-tier payment mechanism. In this video, we will discuss how this two-tier payment mechanism works and why there is a need of an alternative payment mechanism. So let's begin our discussion. In two-tier payment mechanism, there are two parties involved. One side, there are central banks. On other side, there are commercial banks and payment service providers. Central bank operates by issuing liabilities in the form of currencies. It also maintains deposits from other banks in reserve and settlement account to settle wholesale transactions. On the other hand, commercial banks operates by issuing deposits to customers, and it also acts as an intermediaries for customer payments. These deposits are convertible into central bank money, hence it makes this mechanism attractive and secure to settle transactions. Further, this mechanism also provides stability as these deposits are issued by banks under the license of central bank. This mechanism is also known as account-based payment mechanism. This account-based payment mechanism runs settlement risk as economy level. This can be inferred from the picture. During the day, banks settle customer transactions and also transaction with other banks. They manages their liquidity by borrowing in interbank markets. At the end of the day, all transactions get settled with the central banks. Until the accounts are not settled with central banks, the settlement risks stay in the system. Trust is important to make this mechanism attractive. To create trust in bank money, there are institutional mechanism has been created. How this mechanism works? First, bank money or bank deposits are convertible at par in central bank money and it is payable on demand. Second, central banks act as a lender of last resort if there is a crisis situation and it provides liquidity in the system. Third, prudential regulations and supervision mechanism has been created to minimize the risk of default in the banking system. All these factors create trust and make this mechanism secure and attractive to settle transactions. What is the importance of payment mechanism? Payment systems are at core of economic development of a country. It supports financial stabilities and helps in financial inclusion. It also supports long-term economic growth of a country. In India, central banks has taken various measures to set up payment mechanism which are safe, secure, affordable, reliable and efficient. In 2016, it has implemented fast payment system which is known as UPI. These initiatives by central banks helps to enhance financial inclusion in the country. Presently, India is leading the world in digital payments. Now let's understand why there is a need of an alternative payment mechanism. In the previous videos, we have discussed about central banks are upgrading their payment systems to support digitalization. They are coming up with the new mechanisms to enhance efficiencies. In fact, they have implemented fast payment systems. So then why there is a need for an alternative payment mechanisms? First, with the increase in digitalizations of businesses and consumer experiences, the new form of payment mechanism has been flourished. These mechanisms are from the cryptocurrencies, stablecoin, new payment networks, and payment wallets. Wider acceptance of these mechanisms may diminish the uses and acceptance of central bank money, which can pose a risk to the monetary policy as well as to financial stability of a country. Inefficiencies in the bank sponsored payment mechanism. Present payment mechanisms favor banks. Banks gets competitive advantages by getting access to low cost of funds in the form of current account and saving account, which we call it as a CASA, and it also get access to consumer data. This will lead to creation of own walled gardens by bank, which hinders entry of new payment players and hence reduces competition in the payment space. This will lead to delay in payments and higher usage charge for the consumer. Though central banks are putting restrictions on the usage charge as well as creating level playing field by introducing fast payment systems. Third, falling trust in the banking system. After 2008 financial crisis, trust in the banking system is on decline. Bank money, which is considered as a safe mechanism to settle transactions, 2008 financial crisis has exposed loopholes in regulations and supervisory mechanism. This has led to rise of private currencies. Private digital currencies have their own set of challenges and risks to the economy. Central bank has to come up with an alternative payment mechanism to mitigate risk from private digital currencies as well as to reduce risk of banking payment mechanism. Fourth, loss of signage. With the increased use of digital payments either through digital currencies or bank money reduces signage gains for central banks. Signage gains refers to gains to the currency issuer over its cost. In many developed countries, cash usage is on decline. There is also fear that cash may not be accepted as a payment mechanism. Hence, there is a need for an alternative payment mechanism to settle transactions in digital economy. Fifth, counter to big techs. Big techs are providing digital services to consumers. By virtue of this, they have access to a lot of data. With the entry in the payment space, they will get further access to consumer data. This will help them to understand their behavior and consumption pattern. With the help of this data, they can alter customers' behavior and can also create new markets. Central banks are aware of such risks, hence, they are working to protect consumer privacy in the payment space. To sum up our discussion on alternative payment mechanism, there is a need of an alternative payment mechanism to mitigate risk of private digital currencies and entry of big tech companies in payment space. There's also need to protect customers from bank failures. Central banks are deliberating to launch their own digital currencies to mitigate such risk and to provide alternative mechanism in a digital economy. Thank you for watching the video. If you like the video, please subscribe to the channel. We will come up with the more videos on the subject. See you with the new video. Till then, bye bye.